If you think about the two big silver spikes, with gold in 1980, in advance of gold or separate from gold in 2010, in both of those circumstances, there was great economic concern, which would mean industrial metals mines shutting down or slowing down or cutting production at a time where that same uncertainty was increasing. Like, silver wasn't at odds with gold. It just took off parabolically compared to gold. So you had decreasing production because of the economic woes, and you had more safe haven demand because of those same economic woes. And that affects silver more. And people could see that the supply constraint was going to be there for silver. Whereas gold supply, as what is it, 97% of all the gold ever mined is still sitting around in purified form. It doesn't have the same supply constraint that silver, which is used up, has. So you get these perfect storms for silver. And again, I want to stress, this is exciting. It's interesting to see this breakout. I am surprised by it, but I am not promising that silver is going to 50 bucks tomorrow. But in this kind of setting, where if we see an industrial shutdown at the same time as you see the safe haven demand, that's the context in which we've seen silver go to 50 before.
Hi, I've got a very special video for you today. I'm here with Lobo Tiggre. He's a precious metals mining stock analyst, and I've been following him for years. And I've lived in Puerto Rico now for almost 8 years, and he lived just down the street from me. So Lobo, how are you doing?
I'm glad to be able to do this in person, Mike. I'm doing great, but this year with the monetary metals, not just precious, the monetary metals taken off, life's looking pretty good in the tropics.
Yeah, today we're filming this on Thursday, and the gold has just gotten $5 away from 2,400 bucks an ounce. And it wasn't too long ago that it was 1,900, 1,800. 1,700, even 1,600s, that was like 3 years ago or 4 years ago. But just the past couple of weeks have just been phenomenal. And we've been waiting for this moment for a long, long time, haven't we?
We have. Let's put a little bit finer detail on it. We've been plus or minus $1,900, $2,000 since the COVID lockdowns. And since gold saw inflation coming, it led, as it typically does, which is why it doesn't correlate with CPI, because it leads. It led, and we've been in this range now for almost 4 years. And the conventional,
that's made the handle of the cup and handle, and the inverse head and shoulders pattern, and the triple top.
Never mind my coin collection from back in the 1970s. In the current context, we've been waiting for this to resolve itself, and we expected gold to go up. But Wall Street and the smart money thought gold was going to come down. And I think that's a lot of why the gold stocks have been underperforming. They were trying to lead gold down, but they were wrong. Here we are with gold breaking out. And not breaking out from 1,000 bucks an ounce or 1,500, it's breaking out from 2,000. So look where we are in just a few short months. This is an interesting time. It is literally a historic time to be talking about monetary metals.
It is, and it is showing that there's something wrong out there. They call gold the canary in the coal mine, and I call it sort of a reverse canary, because this doesn't die when something's wrong, it comes alive. And that's what it's doing right now. It's really coming alive. We were talking about, normally gold leads silver, and there's usually quite a lag. And then when silver starts outperforming gold, that's a signal normally that the end of the bull market is near, was what you were saying earlier. So tell me about that.
That's another really interesting time. Even the most diehard silver bulls, they call me Darth Silver on Wall Street Silver because I've been cautious about silver. I've been talking about its greater industrial aspect lately, which, by the way, has helped silver at times when gold has been taking and pounding. But silver is acting up, and this is really interesting. It's not at an all-time nominal high as gold is yet, but it's making fresh multi-year highs. As you and I speak, silver's up more than gold year to date. Gold's up. Well, I don't have the latest numbers as of this afternoon, but this morning gold was up about 13.9%. Silver was up about 17% year to date. And that surprised me because I don't think we're late cycle for this gold bull market. That,
right.
You know, we can say, oh, 4 months. That's nothing. Usually, you know, a gold bull runs for years. So given that silver tends to underperform gold at the beginning of a new breakout, and given silver's industrial side, and one more thing that we haven't said, you know, I'm still in team hard landing. I think the U.S. exceptionalism will not save the U.S. from the recession that's coming. I think the money helicopters will address it quickly, but I still think that first we go into the recession, and that's going to weigh on silver demand from the industrial side. So given just the historic underperformance at first, in the industrial side, I thought, you know, let's wait and see what happens with silver this year.
Yeah.
But no, silver's, I'll tell your audience first, like, I was wrong, okay? Silver did not, you know, like, wait and see on silver. I wish I could retract that call, but it is what it is. I went with the probabilities. Silver is taking off already. And that's exciting, but it also has to have you rethinking, okay, where do we go from here? If silver goes into one of its periodic little mini manias that it does, like 2010, you know, it just went almost back up to 50 again, even though gold was still going, you know. So when silver wants to rip, it just does. That's the track record for silver. I'm not promising, dear audience, that this is silver going to 50 right away. And I'm not a technical guy, but there's no ceiling over where we've just moved. So if I was a gambler, I'd probably say, you know, let's put some money on silver going up to a new nominal high. As a more disciplined speculator, I want to see, I'm not sure I'm thinking about this actively now. I need to write about it this weekend. But silver absolutely has my attention. I was wrong about it lagging gold at the beginning of this market. And I do think we're at the beginning, not the end.
Well, it's only been the past couple of days, though, that it's started to really outperform gold.
Yeah.
It's just like the last 10 days, maybe. Before that, gold was really leading, and we were waiting for silver to do something. It finally is. But, you know, you said you're in the hard landing camp, and so am I. Somewhere between, you know, a crisis with a hard landing and total disaster. I just think the energy that has been built up from the manipulation of the economy because of the pandemic. When you warp the economy, the free market always tries to iron it out. And right now, we've got areas in the United States like where people are paying more than 8 times their annual income for a house, and the average is about 3 times. When you look at all these different ratios, everything is just way out of whack. All of this stuff, you know, you can go back hundreds or even thousands of years. People can only afford a certain amount of their income to put a roof over their head. And so that is like one indicator, but all of the different indicators, you know, I've got to do an update for chapter 5 of my, chapters 5 and 6 are about the warping of the economy and everything that's out of whack. So I've got to do an update on that just to show how it's even gotten more out of whack. But when this crashes, you also said that, you know, they're going to come to the rescue with it's going to be type, not print, because you don't,
printing's expensive. It requires paper.
And some work, right?
Yeah,
right? And the difference between 1 and 1 trillion is 12 zeros, right? Yeah. So it's pretty easy to inflate. But the silver story, you know, in my first book, I was trying to teach people about the silver story. David Morgan had been telling people about, you know, from the Morgan Report or silver-investor.com. He had been telling people about silver for years, but the story sort of still remained something that was just in our specialty market for a long time. But now, you look at like the Commitment of Traders report. Do you get the updates from Nick Laird of Gold Charts RS?
No, I don't. I'm aware of it, but I don't follow that as religiously as some people do.
He emails some charts. He sort of, you can go to his website, and it's just a wealth of knowledge and charts and history. It's goldchartsrs.com. But he emails, if you're a subscriber, a few different things like China and Russia gold reserves, their accumulation that's going on. But the Commitment of Traders, we've gone, the small specs, you know, there's the the commercials and the large specs, the tech funds and stuff. And the commercials are almost always net short on silver. And they say it's a manipulation and everything. And it is to a certain extent, but a lot of it is just the way that the markets work. When we sell gold or silver to somebody, there has to be a futures contract that is purchased, and then when we find the gold and silver to deliver, that futures contract gets sold, and we fulfill the order and so on. So it's a way of being able to lock in a price instantly, and that is part of what you're seeing. However, the small specs on gold are a minuscule part of the market, but on silver they have grown to a very large part of the market, even though this is paper silver we're measuring on the commodities exchange, so it's not real silver, and it shouldn't be setting the price. And then the other thing is Chinese demand.
Let me jump in. Oh, that's a big. Let me jump in on that, because you're touching on one of my pet peeves. I don't call it the gold price.
Right.
I call it the gold-dollar exchange ratio, because I'll agree with the original J.P. Morgan. Gold is money. Right? All else is credit. That's his famous quote. Yeah. Gold is money. Everything else is credit. But in my mind, gold is money, and silver too. Therefore, it's not a gold price. It's a gold-dollar exchange ratio, like yen or euro dollar. Right? It's a forex question, not pork bellies or coffee or something like that. So. So when we talk about the price,
futures contracts are just like a currency, and fiat currency is a currency, and so this is an exchange rate between paper.
But it should be like the real exchange rate. But when we look at these futures contracts, we're not looking at people actually buying and selling gold or silver. We're looking at the paper market. And why do we do this? Why do we self-inflict this torture on ourselves looking at the wrong measure? Well, because it's electronic and it's instantly quotable. You can get this futures contract price instantaneously anywhere in the world. Whereas if you had to say, okay, what did Joe Schmo just sell his Morgan dollars at the local coin shop for? You could never aggregate that data. You couldn't, right? So there's a reason why we use this COMEX data or LME data, because it's convenient. But in my view, it's a mistake to say that that is the price of gold or silver. It's just a convenient proxy for the actual thing in the real world, which is a forex question.
And they diverge big time during a crisis when everybody wants it. During the crash of, during the global financial crisis in late 07, in 08, the price of silver went down below, it was down in the 8s, but 100-ounce bars of silver were selling for $18 an ounce.
Right.
And silver eagles on eBay were going for up to $36 an ounce when the paper price was only, it was like eight something.
Right. So the premiums are part of the real exchange ratio.
But my point is, all of the silver story is being told. More and more people are learning about it, and a lot of these small investors are now driving it, and I don't think that silver is always going to lag gold the way it used to. This is no longer a game between a bunch of professional traders. There's a whole bunch of more buy and hold type of people accumulating out there. And the thing, when you talked about the industrial demand going away during a crisis, during a recession, but if that happens, the industrial demand for all the base metals is also going away. And where does most of the silver come from? Base metal mining. So the supply shrinks, and at the same time, we should have monetary demand. And that is the explosion that's going to take silver into triple-digit prices.
That's a forward-looking statement. But actually, if you think about the two big silver spikes, with gold in 1980, in advance of gold or separate from gold in 2010, in both of those circumstances, there was great economic concern, which would mean industrial metals mines shutting down or slowing down or cutting production at a time where that same uncertainty was increasing. Like, silver wasn't at odds with gold. It just took off parabolically compared to gold. So you had decreasing production because of the economic woes, and you had more safe haven demand because of those same economic woes. And that affects silver more. And people could see that the supply constraint was going to be there for silver. Whereas gold supply, as you know, what is it, 97% of all the gold ever mined is still sitting around in purified form. Yeah. It doesn't have the same supply constraint that silver, which is used up, right, has. So you get these perfect storms for silver. And again, I want to stress, this is exciting. It's interesting to see this breakout. I am surprised by it, but I am not promising that silver is going to $50 tomorrow. But in this kind of setting, where if we see an industrial shutdown at the same time as you see the safe haven demand, that's the context in which we've seen silver go to 50 before. Now I have to say, the Fed says that there is no Fed put, and we're not going to do this. But if they face systemic risk, the money helicopters will fly. So when I say that we're going to go in a recession, I'm in team hard landing. I don't actually expect the typical 2 or 3 year recessionary cycle that we get. I think they will let the money helicopters fly as soon as they see it coming. We may not even get the actual technical definition of a recession, because they'll see it coming, they'll panic, and they'll let the money helicopter flies. But that will still count in my view.
We call them the stealth currency bombers. It's in episode 6 or 7 of Hidden Secrets of Money. Since we're on gold and the stealth currency bombers, I want to take a look at some of your memes here, because and we're talking about the dollar losing value if they create a whole lot more dollars, just like the inflation that we've seen since they created all the dollars for the pandemic. And so we've got one of your memes here. By the way, Lobo has these memes made for him. So he comes up with an idea. He's got an artist. The guy he pays to have this done. And he puts these memes out that a lot of people pass back and forth. He's the guy that pays for them.
and just to give credit where due, the guy who comes up with them, his name is Kyle Johnson. He blushes when I call him a genius. But I would have never thought of a lot of these things. Or even if I had the idea, which sometimes, I'll give him an idea, and sometimes they're his. He has to go find the images and the right text to put on it. And he has the sense of humor and the sense of the market, the audience, and so on. And it's brilliant to have good help and support like that. He writes as well for us, too. So I'm very proud of my team. He's one of the geniuses I have on board.
Yeah, as am I. I've got Dan and Lincoln and Aiden as my media team. Those are the people that make Hidden Secrets of Money. And anytime you see an animation in any of my stuff, that's Aiden or Lincoln, and so I'm proud of my team as well. But you've got Americans. This is during the banking crisis, so you've got a Republican and a Democrat here. So I like how you reserve your political bashing for both parties, which is what I do. Americans can rest assured that our banking system is safe. Your deposits are safe, and they're like wagging a finger at you. And then Nixon, let me lay to rest the bugaboo of what is called devaluation. Your dollar will be worth just as much tomorrow as it is today. And so here we have the 1970 cost of living index. And a new house was $23,450. The average income was $9,400. A new car was $3,450. Minimum wage was $2.10 an hour. Movie tickets, $1.55. Gasoline, 36 cents a gallon. A postage stamp was 6 cents. And on and on and on. It's so.
I remember my dad being outraged when gasoline hit 39 cents.
Wow.
He's, what's next, 40? I remember that.
So. And capturing the images of both presidents with their finger up, you can rest assured. I think these are brilliant. So I'm going to close those. Here we've got one, the Fed calculating why people use eat now, pay later.
And by the way, when Kyle came up with this, I thought he was joking. Like, buy now, pay later is a thing. And the statistics show that Americans are doing more buy now, pay later, which is it's seen as like the worst form of financing. It's like with payday loans and that sort of thing.
Except when you see 0% interest or something that's truly below the rate of inflation.
Well, but it's something that people in the lowest rungs of the economic ladder use.
Shouldn't, yeah, and they shouldn't be.
So there are red flags there.
Yeah.
So I thought he was making a joke about this Jones thing, but no, he showed me an app. There's there is an Eat Now, Pay Later app out there.
Wow, I had no idea. You were talking earlier, we're both sort of libertarians, and you said that is an advantage for people when it comes to investment advice. Tell us about the reason you said that.
Or investment decision making.
Yeah.
So the way I see it is, a lot of times we libertarians, we get beat up, we're the black sheep of the family. People think we're crazy, right? They can understand, if they're a Democrat, they can understand those evil Republicans, right? Or if you're a Republican, you can understand those stupid Democrats. That's normal, even if it's wrong. But a libertarian, there's just something wrong with you. You should be on, my team or theirs, right?
But we get back to sit back and be highly entertained and horrified at the political fighting that's going on in the division and the separation in the country. It is horrifying.
It is horrifying. And my friend Doug Casey, he can laugh at that. He gets a good chuckle out of it, but I just find it rather depressing. To see the country so divided. Yeah. I've never seen the country so divided. The former tree huggers are now as likely to throw a punch as the supposed. Anyway, yeah. We're getting off the point. The point is, dear audience, that if you feel like the black sheep of your family for having neither left nor right, but having independent thinking, freedom-oriented thinking, this can be your superpower, because you're not in the right-wing echo chamber. You're not in the left-wing echo chamber. You're outside of the major bubbles out there. And this gives you the ability to look at things independently, evaluate them without the constant reinforcement of your own ideas being regurgitated by all the talking heads that you listen to all the time. So this is really important, because any orthodoxy is going to get things wrong. And so, if you're in Team Biden right now, you cannot hear anything other than that the economy's doing great, no matter how bad the numbers show this, that, and the other to be. Or if you're on the other side, we'll see. But either side, there's an orthodoxy. And anytime you have an orthodoxy, that's blinders. And to the investor or to the speculator, blinders of any kind are a risk to financial results. So the next time somebody rags on you for being a crazy, independent thinker, not like, everybody else, just remind yourself that independence is your superpower when it comes to evaluating data. I'm not saying you're going to get everything right. Nobody does. But I think it helps you to analyze more objectively, to not be drinking the Kool-Aid on the red Kool-Aid or the blue Kool-Aid. Either one still has cyanide. Sorry.
A Jim Jones joke. Okay. So I think, this episode is running a little bit long, but I think we should make another video out of this and sort of
we can make part one, part two?
Part one, part two with Lobo Tiggre. I want to thank you so much for watching. And Lobo, where can they find you? IndependentSpeculator.com, right?
Yes. The quick version is, we have a free weekly letter. If you sign up, I will not spam you with with advertisements every day, and you can see if you like my thinking or not.
I want to thank you for watching. We'll see you next time.